Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts and going over data. And so here we are looking at the daily chart for NIO, ticker symbol NIO, which closed on the day Friday, February 21st, closing the week at a price of $4.44, being up 1.6% on the day. And maybe there's some good luck there with the repetition in numbers there, and also with the after hours price being 4.469. So, there's some fun there, some good luck. But yeah, looking at the chart, I have talked about this a number of times as we have attempted to break out from this downtrend. And as you can see here, we have broken out, but I think we might be needing a retest before we really see some moves to the upside. And so what I have drawn here is this downtrending light blue line, which is based on the high from October 28th and the other pivot high being from December 9th. Then we also have a test or a kiss of that level with the high from the 6th of January, as well as testing it again here on the 4th of February. But then, of course, we have broken out. And so, I am thinking this is looking pretty good. However, with the big wick to the upside on Friday's trading, hitting a high of $4.69. Again, that number popping up, I think that is good luck, a good omen. However, this is a wick to the upside, so I do think that we might be seeing perhaps one final pullback before we do really rip to the upside. So I wanted to talk about that and some levels to be looking at. And I also did want to point out that I have this doodle here that I suggested that we could be pulling back to maybe fill this gap here around $4.26, which was the closing price on February 13th. I do have an alert there, so I will be aware if we do pull back to that level. But if we do notice, perhaps you can see at this peach line here, that is the 21-day moving average, which is currently at $4.29.2, or right around $4.30. Also corresponding with this 50% retracement here, but I am going to want to adjust that retracement since we did move higher up to that high of $4.69. So I'm just going to move this up to that level, make sure that it snapped into the right price there, and it did. And so looking at that, we do have the 618 here, right around $4.28, corresponding pretty nicely with a gap fill or a near gap fill. And I would actually argue that a near gap fill is more appealing to me. It matches, taking advantage of retail, taking advantage of people seeing this gap and saying, hey, I'm going to wait for that gap to get filled. I'm going to place a limit buy order for tons and tons of shares, whatnot, at 426, but then it only pulls down to 428, maybe 429, and then it really, gets into rip your face off rally mode, leaving those who are patiently waiting for that gap to get filled on the pullback, leaving them behind, and we see the price go higher. But we did see, a nice dip down on the 20th, hitting a low of $4.30, so nearly getting to that 21-day moving average. So, that may be the pullback, but again, with this big wick to the upside, I do think that we could be going lower. And since we do have that 21-day moving average there, I am just going to adjust the proportions for this Fibonacci retracement just a little bit. I'm going to remove the 618 since we do have that 21-day moving average there, and I am going to put on the 786, really being as like a worst case scenario. Price could be coming down to around $4.17 or maybe $4.20, 420. Gotta have fun with the numbers there. So, I think that's kind of the range that I could see, with the 50% retracement here being at $4.36, corresponding pretty nicely with that 50-day moving average at 438. So I could see price coming down anywhere from 438 down to around 417 But what I find to be most compelling is for this to pull back to around 430, getting very close to a gap fill to then, of course, leave those who are patiently waiting for it behind as it does go higher. And speaking of these moving averages here, the 21-day and the 50-day, I should also note the 200-day moving average is currently at $4.76.7. And we did get pretty close to that with Friday's wick high. And so, really just like the same kind of drawing that I had here, I do think that we could be seeing a pullback to potentially 430, maybe 426, maybe even 417 before we get a bounce and breakout. But where could I see this going to the upside? And so one level that we could take away from this is the high, the pivot high that is the basis for this downtrend that was hit on October 28th. That was at a price of $6.03, being around $6. Psychological level there being a whole dollar number there. That might be acting as resistance, but I also do have the pivot high that we hit on, let's see, September 30th, which is at a price of $7.71 there. So, I could see that as being a target or $6 a share. A couple things that I could do is, let's see, do a Fibonacci retracement from that high, $7.71, coming down to this low of $4.01, and just making sure that these levels are correct, 771 and 401. So looking good there, just going to lock that in place. We do have the 50% retracement as well as the 786 up here. And so that 50% retracement would correspond with the top over here, right around $6 a share, whereas the 786 would correspond with a little bit of consolidation here before we did get that big move to the upside, before a red candle pullback, consolidation there, right around $7 a share. And here it looks like that's right around 690 or 6.9 dollars. So that's a fun level, so that might be one that we're coming to. And then if we do take a step back in time, I don't really see much over here. Actually, where the cursor is here, I do see some consolidation above $7 a share, so that could most definitely be acting as some resistance. But then looking at the $6 level, I do see the tops over here as well as consolidation around there. So I could see this moving to $6 or $7 if we do, following the pullback, get that really nice breakout that I am expecting. And another thing that I can do, not a Fibonacci retracement, but an extension, I can take that from the lows over here at $3.63, taking that up to the high of $7.71, and then back down to that low of $4.01. Just going to make sure those levels are correct. Got to adjust this one by a penny there. And so we do have that. And the 100% move, so that is basically, if I do get the measurement tool here, I can just take a measurement from that low to the high here, and then I just move that over to the low over here. That's how you get the 100% Fibonacci extension, and that would be bringing us to right around $8 a share. And so I could see NIO, I'm hoping to see NIO around $8 a share in the coming months. But if we don't get there, we might be finding, like I said, some resistance around $6 or $7 a share. But, that's enough rambling on about the chart over here. Let's move over to Unusual Whales to look at some of the data here. That suggests to me that we could be seeing a bottom, but I think that we need to see a little bit more of a pullback still, because the data is not as bullish as I'd like to see it, even though it is bullish. And so what we can see in the data here for February 21st for the NIO contracts, looking at all of the data for all of the contracts, we can see that the volume was up on Friday. Whether that's buy-in of calls or buy-in of puts, doesn't really matter. The volume was up and suggesting that there was buying. But if we look at the data here, in the yellow, we see the stock price going up with that big wick high and then pulling back over the course of the day. So not such a good look there. It does look like that is a topping signal here, with that big wick there, saying that there are not buyers up here. We need to see a little bit more of a cool off. And then if we look at the data on the net call and put premiums, what we can see is that the net put premium here in red was more or less flat on the day, at least relative to the net call premium in green here. But it did end the day positive. So there was some buying of puts. So that's a little bit bearish. But the net call premium, as we can see in green here, was much higher, hit a high on the day of over $1 million in net call premium. So that is good. But unfortunately, we did end the day a little bit lower with the net call premium at $652,000, so over $500,000. So looking pretty good there, but I'd like to see millions of dollars going long on calls. Haven't seen that just yet. But if we do look at the net put premium, which was also positive, that was only up to around $150,000 or $145,000. And so that's notably lower than what we're seeing in the net call premium. Even though it is positive, it's much lower than the net call premium. So that does suggest that this is more in the favor of the bulls. And if we do scroll down, we can see that bear bull slider there is more in the favor of the bulls, with the majority of 47% being on the bullish side, factoring in that neutral portion of it. But generally, like I had just talked about, this does seem to be more bullish than bearish. However, if we look at the past 30 days, just to get a bigger picture perspective, we do see this big spike in call premium for, let's see, that was on the 21st. So that does look good, that net call premium spiking up there, but we have seen it higher over the past 30 days in trading, with the net call premium on January 30th being almost $1.5 million. It looks like $1.45 million. So, we are not really at this level of being super bullish just yet. So I do think that there will be a pullback. And I should also note that when we were seeing the spike in net call premium, we did see the stock price pull back following that. So that was people basically chasing and getting rugged after that, with the stock price pulling lower. But the stock price is now higher. It does look like, this is effectively, you could view it potentially as a double top, but we have consolidated in the yellow there. So that's potentially, a bull flag that this could be breaking higher. But I suspect we will be seeing a pullback in that stock price to test some of these levels down here before we do break out. And I should also note, probably stands out like a sore thumb, got these two big red days here. So the net put premium going up here by 1.66 million on February 12th, and up here being up by more than, or right around 1.8 million net put premium on February 13th. So what we want to see, what I am looking for, is for net call premium to being effectively above $2 million increase. That would suggest that this is really switching into the favor of the bulls and that this is about to take off. And so I just haven't seen anything in the data here that really stands out as being unusual just yet, standing out that whales are starting to load the boat on NIO. And we have just been seeing, this fade in time over here. We want to see this pullback spring before we launch higher. And something that might be a catalyst for that, I didn't see it on the chart, but from Unusual Whales, it does look like NIO is expected to report their earnings on March 4th. So that's not going to be next week, but that would be the following week, I believe on Tuesday, but March 4th during the pre-market. And it looks like, based on the options data, that we're expecting a move of about 15% going up or down by about 68 or 69 cents, upside or downside. So good to keep that in mind. And then if we do look over at the Greeks here to look at the max pain for Friday, February 21st was $4.50. Unfortunately, we did close just below that, so I do think that the momentum has not shifted into the favor of the bulls just yet, but we are getting very close. And with Max Pain for this upcoming week, expiring on February 28th, being again $4.50, I think that we could be seeing a pullback. Makes sense with the Max Pain data, but then the following week that ends on March 7th, Max Pain is only $4 a share, and the following 2 weeks after that, also $4 a share. And with the 7th being a few days after earnings, I'm thinking that we could be seeing a pullback into earnings. And with there being some good news, maybe some good forecasting, some good outlook for the company that could trigger a move to the upside. And if we are to be pulling back to around $4 a share, still being above it with Max Pain being at $4, and we get an upside move, that could trigger a gamma squeeze with the following Max Pains being only $4 a share and then being $4.50 after that. I think we could then really start to see moves to hit some of these levels to the upside, like $6, like $7, or maybe even $8. And so I'm hoping we get up to $8 by June, but if not, I think just the momentum up to these levels here would be really great. So I'm looking forward to that. I'm excited about it, but I am prepared for another final dip buying opportunity ranging from around, the 50-day moving average here at 438 down to the 786 here around 417. So anywhere in that zone, I think it's going to be a nice dip buying opportunity. And even if we do hit 417, that would still be putting in higher lows. So overall, I think it's looking really good. And I think that the pain that we have endured here is nearly over, and we'll be seeing, payment for our patience in the very near future. But anyways, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thanks a lot and have a great weekend. Take care, you guys.